Happy Thursday, everybody. Welcome to another episode of Market Update, where we discuss leading financial and economic developments in Europe, Asia, and North America. My name is Tony. Let's jump in. And first up, we begin in Europe. Russia's government has unveiled plans to raise value-added tax, VAT, from 20 to 22%, a move that showcases the mounting financial strains of its war in Ukraine and reverses President Vladimir Putin's pledge not to raise taxes again before 2030. The finance ministry justified the hike by pointing to sprawling defense and security costs, as well as expanded support for veterans and social spending. But the measure highlights Moscow's deepening budget shortfall and signals that Russian households and businesses will now be called upon directly to finance the war effort. The announcement came a day after US President Donald Trump branded Russia a, quote, paper tiger, end quote, big economic trouble, end quote, remarks the Kremlin dismissed as political rhetoric. Yet the new tax plans, together with sharply downgraded growth forecasts, suggest Moscow is under increasing pressure. GDP growth for 2025 has been revised down to 1% from 2.5%, while the 2026 forecast was cut to 1.3%. Russia's budget deficit has already reached $50 billion, or 1.9% of GDP, amid falling energy revenues as global oil prices soften and Western sanctions bite. Finance Ministry now expects a full-year shortfall of 2.6% of GDP, more than 5 times the initial forecast. The finance minister predicted the deficit would narrow modestly in coming years, averaging 1.4% between 2026 and 2028. Quote, the Kremlin's priority remains military expenditure, and it's now the main problem for everyone, end quote, said Alexandra Prokopenko, a former Russian central bank official now at the Carnegie Russia-Eurasia Center, adding, quote, at the start of the war, spending came from reserves and oil revenue. Then they raised corporate taxes. Now all businesses and citizens are going to finance the war directly because there ain't any other source left, end quote. The VAT increase, which also lowers thresholds to capture small businesses, could raise an additional 0.5% of GDP annually, according to estimates by independent outlet The Bell. It follows a 2024 overhaul of personal income tax and a series of irregular levies, including so-called voluntary donations, demanded from departing Western firms. Kremlin spokesperson Dmitry Peskov acknowledged, quote, certain points of tension, end quote, but insisted the budget was, quote, absolutely balanced, end quote, and said Russia's economy had, quote, rebuilt itself around the needs of the war, end quote. Still, analysts warn that sustaining high military outlays will force painful cuts elsewhere. As Prokopenko noted, quote, Russia isn't a paper tiger yet. They have enough resources to keep fighting, but everything else is getting harder to finance, end quote. Next up, the United States is preparing to extend a $20 billion swap line to Argentina and is poised to buy the country's foreign bonds, offering a dramatic financial backstop to President Javier Milei as he battles to restore investor confidence and stabilize a fragile peso. Treasury Secretary Scott Bessent confirmed the negotiations on yesterday, in a post on X, sparking a brief rally in Argentine assets. In a subsequent television interview, Bessent described the package as a, quote, bridge to the election, end quote, a reference to Argentina's October 26 midterms. Milei, a libertarian reformer, is struggling to maintain momentum after his party's landslide defeat in a provincial vote earlier this month raised doubts about his ability to advance a pro-market agenda. Investor unease has intensified since the setback, triggering capital outflows and renewed pressure on a peso long vulnerable to crisis. Argentina's central bank has already spent more than $1 billion defending the currency, depleting reserves. Following Bessent's announcement, the bank cut its key one-day repo rate by 10 points to 25%, while dollar bonds jumped and equities gained. Bessent said the US is now prepared to deploy a standby credit from the Treasury's Exchange Stabilization Fund. Economists argue that Washington's readiness to directly purchase Argentine debt could reduce country risk and potentially reopen capital markets by 2026. Quote, this helps to correct expectations, end quote, said Daniel Marks, a former finance secretary, while urging urging a shift to a more flexible exchange rate. For Milei, who has touted fiscal balance as his chief accomplishment, the timing is critical. Congress has moved to override his vetoes on spending bills, complicating efforts to rein in inflation, which has eased to 34% from nearly 300% a year ago. Yet economic activity remains weak and unemployment high, underscoring the political stakes of the midterms. US President Donald Trump campaigned on scaling back US involvement abroad, but Argentina's Milei has emerged as a rare ideological ally in Latin America. Critics warn that aid risks repeating past failures. Quote, "It's a lot easier to lend to Argentina than to get the money back," end quote, said Brad Sitzter, a former Treasury official. Even so, for Milei, the US package may prove decisive in buying time, both for his embattled economic program and his party's electoral prospects. Next up, we move to Asia, but just quickly, if you want to continue to be on top of the most up-to-date analysis on the biggest stories from the world's most important markets, consider subscribing to Market Update, hit the bell notification icon, and you will be. And if you're getting some value from today's episode, don't forget to hit the like button. And finally for today, we move to Asia. South Korea's central bank and political leadership sounded fresh warnings this week over mounting economic and financial risks, a reminder of how external shocks and domestic imbalances are colliding in a delicate moment for Asia's fourth largest economy. In its semi-annual financial stability report on Thursday, today, the Bank of Korea, the country's central bank, flagged threats from US President Donald Trump's tariff policies, prolonged industrial weakness, and housing market imbalances. While government stimulus and cheaper borrowing costs are easing burdens on households and small businesses, the Bank of Korea cautioned that such relief risks reigniting property speculation in Seoul's overheated housing market. Household debt, though moderated, remains a core vulnerability. The central bank also warned that tariffs could increasingly erode corporate profits and repayment capacity in key industries, delaying balance sheet repair at lenders and amplifying credit risks. Although Seoul secured a deal to lower blanket US tariffs to 15%, automobile levies remain higher, leaving one of Korea's flagship sectors exposed. Questions also linger over the implementation of a $350 billion investment plan tied to the agreement. Against this backdrop, the Bank of Korea has kept policy rates unchanged at its last two meetings, after 4 cuts since October last year, and will next decide on the 23rd of October, late next month. Officials emphasized the need to maintain a firm macro-prudential stance as project finance loans linked to the construction sector continue to pose risks, particularly in sluggish regional housing markets. Adding to the uncertainty, the Prime Minister of South Korea told US media this week that South Korea's multi-billion-dollar investment projects in the US remain in limbo due to visa issues, after a raid on Hyundai LG battery plant in Georgia led to the detention of hundreds of Korean workers. Though released, images of shackled workers have fueled public anger and rattled confidence in the investment plan. Kim warned that without assurances on worker safety, meaningful progress on the $350 billion package is, quote, virtually impossible, end quote. Washington has come out and said that it is willing to find a solution for this issue. Seoul is also seeking a currency swap agreement with Washington to prevent reserves from being stretched thin by the investment pledge, which represents over 70% of Korea's foreign holdings. President Lee raised the issue directly with U.S. Treasury Secretary Scott Bessent in New York this week. With defense spending targets rising, debt levels climbing, and demographic pressures persisting, South Korean policymakers face a difficult balancing act. As Trump prepares to visit South Korea for an APEC summit next month, trade talks, visa frictions, and regional security will all test the resilience of the alliance, as well as Korea's financial stability. Okay, that is today's episode of Market Update. Thank you so much, everybody, for watching. Have a good Thursday, and I will see you for this week's final episode tomorrow.